You're listening to the Moose and the Loose, your 10 minutes action-packed financial podcast with your host, Mikey Hu. Hey, what's up, Market Moose? Mike from the Moose on the Loose. Happy Wednesday. Well, can we say Happy Wednesday when we're going to talk about Tourmaline? I don't know, because Tourmaline is in Tourment, and I found myself very funny for saying that. Okay, long story short, got a question from a DSR member. What is going on with Tourmaline? So Tourmaline, ticker TOU.TO. One of the largest natural gas producer in North America, the largest Canadian natural gas producer. So a big business processing and midstream operator. And I said most of it is natural gas, about like 80% of Tourmaline production. Rest is oil, and it has not been doing well this year. Actually, the stock is down roughly 10%, including the dividend, and they're like paying a generous dividend. And why the XIU, so the S&P TSX, is up 13%. So when you're down 10% and the rest of the market is up like double digit, you're not at the right place. So the question was like definitely a good one, saying, okay, so what's going on? Why am I losing money on this stock right now? Well, first thought, before we go into the business model, before we go in the latest quarter or lane earnings, and before I tell you my take on why the stock is down, well, before I did any digging, I just thought, well, it's an energy stock, so being up or down 10% in a short period of time, kind of like business as usual. And if you look at Tourmaline price, it happens all the time. Like, it happens literally all the time. However, it's a little bit more concerning when you look at the larger view. So yes, year to date, and I mean, on 1 year, a stock could be wrong, it could be bad, and it's not the end of the world. I mean, my largest position is Apple. Apple is down. Now it's getting a little bit better over the past week after a few announcements that they were going to invest a little bit more, but a lot of problems are there. The stock at one point was down like 20%, but nobody cares about Apple, right? They're just like, Apple is Apple. It's all going to be good. Yet it was down 20% year to date, not too long ago. So Tourmaline being down 10%. All right. So if you look at the past 3 years, though, the total return is minus 3.55. That includes all the generous dividend and the special dividend that you received on top of that. So you're not making a single buck out of Tourmaline over the past 3 years, while the XIU, again, the TSX 60 is up 51. So no money on one side, 51% on the other side. You're definitely lagging, right? But it's a good old classic. If you bought it during COVID, well, you are a genius, because over the past 5 years, you're up 410%. So as again, energy stocks, super volatile, and when you buy them as there's like no hope around commodity prices, you're making the deal of the century. But if you bought in like 21, 22, 23, well, not making that much money. And that's the problem. And people tend to forget that there was a life before 2020. Like, before that, energy stocks existed as well. And before 2020, it was not pretty. I mean, Tourmaline, the stock price was going down on a pretty solid trend between like 2017 till 2020. So it was not the COVID that dropped the stock in the first place. And that is also just being part of energy stocks if there's not much demand. And the energy prices are not very high. Well, there you go. I mean, we follow a little bit more the oil barrel, but if you look at the oil barrel price right now, we're not even at $70. So it's not going that great on the energy side. And of course, you have to focus on the Henry Hub for Tourmaline, because this is the spot price that will direct the natural gas liquid prices. So that is going to give you a pretty good idea if you follow the Henry Hub. We're going to talk about that later on today. But that's the real thing that you have to focus. But even if you keep in mind the oil barrel, well, not growing these days. Actually, quite the opposite. And with Trump that wants to drill everything that he sees, well, I mean, if you increase production, what's going to happen with commodity price? It's going to go down. I mean, that's how it goes. So, of course, short-term future for energy stocks probably not going to be that great for that reason, because the stock price will go down and that will hurt the entire business. There's not much you can do about that. So here's what was a bit strange, though. Tourmaline reported a pretty good quarter not too long ago, but the stock price dropped like more than 6% on that day and roughly 10% like over a few days. Revenue was up 7%. Cash flow per share was up 2%. Most of the time for energy stocks, I prefer to look at cash flow per share because earnings per share are not that precise, in a sense where they usually, and this is the case for Tourmaline, they are capital intensive, they have huge capex, so they invest massively in new projects, which usually generates a lot of amortization that will affect the earnings per share. So the earnings per share, not exactly the best way to focus on like not the best metric to analyze a stock. Cash flow per share is a little bit more precise. The problem with cash flow, of course, it's quite volatile. So when you look at both, you'll have a better idea. So here's the thing. So a lot of natural gas volume. So that was great. The company boosted up the revenue, but the earnings and the cash flow per share were obviously hurt by lower pricing, and that is going to continue moving forward probably. So that is going to be another problem, and that was what happened. Like the big news around that was this. I mean, revenue was expected to be higher actually by analysts. So even though it was revenue up 7% was good, but expectations were higher, and stock price are literally driven by expectations. So if analysts expect something and you don't report that, that's not going to be great. But out of this, I mean, when you look at the press release, you're just looking at numbers. Like numbers are looking pretty good actually, and the company's actually low capital cost. It costs them not much to produce the natural gas, so they're profitable. They can produce a lot. They have big expansion plan. It's going well. Debt is under control. They're paying a generous dividend plus a special dividend. So from time to time, they pay an additional bonus. So you get that 50 cents a share plus, like recently they just announced in that press release, another 35 cents a share as a special dividend. They announced a long-term LNG feed gas supply agreement with Uniper. So another like good thing because it's like stabilizing the business, continuing to increase and expand the business as well. CapEx is going there. The focus is, of course, spend a lot of money to generate more free cash flow, and everything works fine. So where's the problem? Well, the problem is like it's again classic issue. If you look at the Henry Hub spot price, it's not going up. Yes, it's volatile, but it's not really stronger over the past 3 years. It's down since the beginning of the year. So that explains mostly what's going to happen is the upcoming quarters will probably continue to report like weaker natural gas price. That will lead to weaker cash flow per share, weaker earnings, and even if there's good demands and the revenue is up, the profits are not going to follow as fast as expected. And the market is disappointed by that, which is totally normal because the company is telling you roughly, well, we have absolutely nothing that we can like use hedging strategies, which they do, but there's a limit to the hedge. I mean, you cannot like secure contracts selling your natural gas at like $5 MCF while it's trading right now. The last quarter was at 334. It's expected to be lower the next quarter, so it's not good news. And the market has revised their expectations for that, and there's not much to do. So even though there was a lot of good news in the earnings, the numbers were more than okay, actually pretty decent. Well, the short-term future for this company is not going to be that great. The weakness in natural gas price will drive everything around the stock. I mean, I have Canadian Natural Resources, CNQ, pretty much the same kind of story, but with the oil instead of like the natural gas. But that's the whole story. I mean, great company, great asset, debt is under control, great balance sheet, expansion plan, everything is there, good dividend payer, But as long as there's no bull market around commodity prices, you're not going to make much money out of Tourmaline. And it's going to be the case unless we have something that drives up the Henry Hub spot price. And that is unfortunately the reality when you invest in commodity related companies. They cannot do anything else. I mean, I made a play on Franco-Nevada, that is a streamer for gold. Based on that, I thought, well, the stock price was depreciated. The gold price was on a bull run. I mean, it was kind of like an obvious play there, in a sense that it made sense that it could just go up for a specific time. Will I keep Franco-Nevada forever? Probably not, because it's still going to hit a place where volatility will slow down, the worries, the concerns around the stock market will smoother, and then the gold price will probably go a little bit lower or stabilize. And at that point, it will be a good time to sell. So it's always a good time. It's always the same story, unfortunately. And this is what's happening with Tourmaline. So not a bad company, but definitely a tough industry to be in, especially right now where commodity prices are not giving signs that it's going to go higher up. So I hope that is shedding some light on Tourmaline. I hope that you have enjoyed this one. We're going to talk again on Friday. And until then, don't forget to stay invested. Hey, welcome to the disclaimer. If you're listening to The Moose and the Loose, you cannot really expect me to give you buy or sell recommendation or financial advice, right? You're here for fun, you're here for information and some entertainment. But I am not your financial advisor, I am not your broker, so therefore I'm not liable if you're losing money after listening to the podcast. If you're looking for some advice, go see a professional. If not, you can enjoy the show and do your due diligence after it.